Welcome. Grateful for everyone that's here. Today, we're going to deep dive into how you specially engineer these whole life insurance policies for mutually owned dividend paying companies for high early cash value. You guys might have seen it known as HEC-V, which is high early cash value. It's nothing magical about it. We're going to walk you through how by making premium deposits into your banking system, you can instantly protect the money, park the money, have it someplace where it's guaranteed to grow, because everything we talk about in these webinars is about optimal versus suboptimal. There's no right and wrong. There's a lot of ways to do a lot of things in our life, as we all know. It's more about our mindset. It's more about shifting the control from others back into our own hands. And why do we want to do that? We want to do that because we want to be able to be the ones that have the confidence, the security, and the energy to provide for our families, to protect our families, and to build things long term. Why? Because long-term thinking will help us solve many of the problems that we have financially in America today. And our belief is when we go through this, I'm going to show you and talk about today how we can engineer these policies to do all the things you want to do immediately while doing all the things I mentioned. And we're going to go through it just time at a time. You guys have questions, hold them to the end, participate during this, jump through this, and we'll go from there. So why do we want to pay ourselves first? Well, any wealth building book that we've ever talked about here, whether it's The Richest Man in Babylon, Think and Grow Rich, Rich Dad, Poor Dad, Money Master the Game, and the list goes on and on and on. But every wealth building book starts with the principle of paying ourselves first. And I believe that this is biblical. I mention this constantly, but to reiterate, why do I say this is biblical? Because if we look at the first two commandments, they're simple. Number one is love God with our hearts, our minds, and our soul. Number two is to love thy neighbor like thyself. And so if we look at this from a numerical standpoint, we have one being God, we have two being self, and we have three being neighbor. But with the financial state of affairs in the United States, and not you guys, not the people here watching this, but for most people, debt has become a noose around our neck. It's strangling us. It's choking our will to be able to go be creators, to be present for our family. It's dragging us down to the depths of despair. It's putting us in a place of fear. And why is this relevant? Because fear does what? Fear and segregation, fear and aloneness makes us what? It makes us malleable. It makes us easy to be controlled. And that is not the status of men and women, but that is not the status of men. We don't need to be controlled. We live in the greatest country in the world. So we want to have the ability to what? To take care of our families, to provide for them, to protect them. And we do that by how? By paying ourselves first. So rather than having tons of debt, credit card debt, other debt for things that we think that we need, that we just don't need, let's really look at why paying ourselves first is the starting point to everything that's related to infinite banking and to wealth building. Remember, wealth building, to be able to be a wealth builder, a wealth creator, must start with that simple shift, that changing the one thing, which is paying ourselves first. So whether you use the infinite banking concept or not, if you're able to have a little bit more discipline, a little less regret in your life, a little less judgment to yourself, a little more love, then you're going to have the ability to pay yourself first. And paying yourself first should be how much? How much should you be paying yourself first, guys and women? Welcome, Jeanette. How much should you pay yourself first? You should pay yourself according to all of the books I mentioned, you know, the Richest Man in Babylon and other books that I just mentioned. Pay yourself at least what? 10% of what you earn. So this means if you make 100,000, you're paying yourself 10,000 a year, right? Or 833 a month. If you earn $1 million, then you're paying yourself 100,000. If you're making 50,000, you're paying yourself 5,000. And then you go from there. It's 10%, like Dennis just said. pay ourselves first. When we pay ourselves first, that means we have already changed the paradigm that most Americans, 95% of people, are doing wrong. And I'm going to call it wrong or suboptimal. Remember, I said earlier, there's no right or wrong, but we're so used to giving up control of our money, to giving our money away to other families, to banking systems, to the grocery guy, to the school person, to the auto woman, to the housing man. It's always going to other people. And then whatever's left over is what we keep for ourselves. How is that really loving ourselves? It's not. And so today, when we go through how we're going to specially engineer these whole life policies, right? These privatized banking policies. And John brought a good question the other day. He's like, Jason, I hear it called the money multiplier method. I hear it called the and asset. I hear it called, banking on yourself and all these other things. These are just people's terms that they use to talk about the concept that R. Nelson Nash brought to us, which is simply the infinite banking concept. Why is it a concept? It's a concept because it's something to be practiced. It is something that you adopt and you put into use for the rest of your life. It is something that you are going to be practicing. And if you're practicing it, that means that you're going to have moments where it's going to feel like maybe you make a mistake, where you do something that's suboptimal, and that's okay. That's the only way we grow. The reason I'm coming from this little room today is because there's not great Wi-Fi in this hotel in downtown Nashville, but we're turning lemons into lemonade. We looked at this. I would be in Orlando with no power and not sure the state of my home today, but we took the whole family. I said, hey, let's make this an adventure. Let's make this fun. Let's bring all of us here together. And the same goes for when we look at our money issues, our money philosophies. Let's make things fun. Let's make it manageable. Let's pay ourselves and celebrate the progress. Let's celebrate the progress that we're making, because why? Progress equals happiness. And what I'm seeing the longer that I've been involved in this space, as a certified infinite banking specialist with the Nelson Nash Institute, the longer that I'm in this, the more I see the importance of education, of what you guys are all giving yourselves in this moment, which is coming and learning new knowledge, hearing maybe the same things, but hearing it repeated. And if the wealthiest pay themselves first, if you guys agree that you have to pay yourselves at least 10%, then when we set up these specially engineered policies, there's really only two ways that you can fund them, right? And when we talk about funding them, we talk about a premium deposit. We also talk about how age doesn't really matter. Like, you're not too old, whether you're 20, 40, 50, 60, even 70 years old. I had someone get approved at 70 years old today for one of these privatized banking contracts. Remember, the most important thing is paying ourselves first. And it's really helping us solve the problem or the things that we're going to need to finance in our life. And what do I mean by things we're going to finance? Just things we're going to buy, things that we want, things that we're going to do, places we're going to go. How do we pay for these? We pay for these with money. We've talked about how money is just a means of exchange. So when we're paying for these means of exchange by giving money for car, car for money, how is it most optimal that we do this? We're going to do it through our own banking system. And there's only two ways. Again, what are the two ways that we can capitalize or pay the premium deposits to ourselves? We're either going to do it how? We're going to either do it over time. We're building up and saving in a consistent, persistent, monthly manner where we're making premium deposits. And if we're looking to buy something bigger, maybe it's a car, maybe it's an investment property, maybe it's a college fund for our kids, but we're going to build that over time. We're going to be consistent. We're going to set it up to be automatic, so we set it and forget it. But that's not what we're here to talk about today. Today, we're talking about folks that have been consistent saving, that have taken their money and they put it into savings accounts, into money markets, into accounts where maybe they're making 4%, 4.25%. I talked to someone another day with about $500,000 sitting in high yield savings, and they're happy with it there. They're like, hey, I know it's not forever. I know it's not guaranteed. And I reminded them that, did you know that that is taxable growth? Did you know that that can change at any moment? And if we can agree that that is true, if we can agree that in a high yield savings account or any other account with the bank, it is not a guaranteed rate. It is not for a guaranteed amount of time. So why not have a contract that is guaranteed? Why not have it in a place where it's going to grow tax-free, where it's going to grow guaranteed, away from the government, away from the banks, where you're going to have access to it, meaning that if you need it, you can have it in a relatively short period of time, like 3 to 5 days, where it is protected, where it's in a stable environment, where the banks keep all of their money. And if you love someone or something, which everyone here does, right? Everyone listening is here because of the legacy piece, because of the family piece, because that is what I'm the most concerned with. I'm most concerned with building my personal family legacy for my boys, for my wife, for future generations of my family. And at the same time, I'm inviting each of you to do the same with your family. The other capitalizer system, remember, one way is consistently, persistently over a period of time. The other way is going to be taking that money that is sitting someplace in a bank, in a money market, in a CD, somewhere where it's sitting. It could even be a qualified plan, even though that's not the advice I'm giving. But if you have money that is tied into Uncle Sam that you're going to pay taxes on, why not pay taxes now when you know what they are, before they increase in the future when taxes are most likely going to go up, and put the money someplace where, again, you are number one. You and a mutually owned dividend paying whole life company are number one because you are the contract owner. This is one of my favorite things, is knowing that any money that we put in our premium deposits and our 4 banking policies, that money is already growing at 3.25% guaranteed every single year. And most likely it's earning a dividend. And when we talk about, well, we're going to do something right now with the money we've been saving. Like, you've been saving for a reason. Maybe it's for a rainy day. Maybe it's for a car. Maybe it's for a yard remodel. Like, one of our current clients is doing a $300,000 backyard remodel. I mean, it's not a remodel. She's basically building a paradise in her backyard, but she's doing it using cash. And so when we pay cash, like, once you spend money, and put it in the chat, once you spend money, will you ever earn money on that money again? And the answer is no. Once the money is spent, you will no longer have the ability to earn money on that money. And that's called the opportunity cost of money. Okay. And so, as we're going through this, as you guys are listening, think, what is your money doing right now? Where are you paying yourself first? To go back to the beginning, what are the wealthiest people doing? They're paying themselves first. And I've talked to people, making a modest income, that are able to save more than 10, 15, 18%. And I've talked to people making $500,000, $1 million, saving nothing. So we want to pay ourselves first. Like, look at Warren Buffett right now. How much money does he have sitting liquid, cash? Almost $300 billion. That's a crazy amount. So if you guys are new here, welcome. If you're someone that's practicing already, welcome. Keep learning. If you want to book a call with me at the end of this call, that is one of the options. You can continue learning on the website. Here is the way that you can book a call with me. You can reach me at the jason.beyourownbanker.com/30. That gives you the opportunity to book a call if you haven't already, haven't gotten started your infinite banking journey. And now we're going to talk about the second way that you can fund a policy, right? That you can fund your specialized, privatized banking system, which I already talked about, has many names, but at the end of the day, it is about taking your money and privatizing it, bringing it back to the you and me level of banking. And with the you and me level, the second way to fund your policy is what? Pop it in the chat if you guys know. One is persistently, consistently over time, where you're paying your new business, your banking business, monthly over a period of time to make the purchases, to finance the things that you need in your life. What's the second way? The second way is to do a larger sum up front, whether you're going to do an annual premium deposit, or you're going to do both an annual premium deposit, and you're going to overfund that amount to give you higher early cash access. And you do this, think of the example that we use when we teach the structure of this. We talk about, imagine in your mind, imagine you're looking at the Kennedy Space Station. Imagine you're getting ready, you're over in Cape Canaveral, you're going to watch one of the SpaceX rocket launches or go back to your youth when the shuttles went up. Imagine the shuttle. The shuttle is what everything is built on. That is the whole life, okay? Strapped onto the shuttle are the two side rocket boosters. Those rocket boosters on the side are the paid up additions. That is your cash value. You know, if you're doing that on an annual basis, that's going to give you somewhere to between 50, 60, and 70%, depending on the design and your goals of access right away. So what happens when that rocket ship takes off, you know, with the rocket boosters attached to the shuttle, it goes up until it reaches the atmosphere. You know, it gets up to that speed, that terminal speed where it can leave, break free of the atmosphere, and it's reached an efficiency point. Then the rocket boosters fall off, they come back to Earth. Elon has structured it in a way where they land back on the pad. They no longer fall in the ocean and have to be retrieved, which is awesome for everything in the ocean, as well as the cost and the efficiency of things, just great technology. And now we're going to go into the next step. Well, what if we want more cash value? What if we want to purchase something or make an investment where we need 80 to 90% in the first 30 days, right? We talk about immediately being the first 30 days once your policy is in force. How do you achieve this? You achieve this by strapping on an additional rocket booster, right? An additional rider, and it gives you three great benefits. It's actually five, but I'm going to go over the three most relevant great benefits. One is high early cash value between 80 and 90%. Two is more efficient growth, because now what's happening, you have a larger amount of money that is compounding uninterrupted, guaranteed within your contract from day one. Are you guys following this? So you have this larger amount of money that's instantly available. And with that amount of money, you're able to have a higher death benefit is the third thing. And that's also one of the drawbacks. But you have the liquidity, you have higher early cash value, just to go over the bonuses. You get a higher death benefit, and you get more efficiency out of your policy. Because why? You have put more capital into your system to begin. So remember, the two ways to capitalize or to pay your premium deposits are, number one, consistently, persistently over time, where you're building up an amount, or you're putting the whole amount in at once so you can access it right away and put the money in motion. And why would you want to do this? Why would you want to do this rather than paying cash? Again, if you're someone that pays cash, that means that you have the discipline of saving. So that's amazing. If you're a cash payer, I did that all of my 20s. If I couldn't afford it with cash, that was my guide, that I didn't need it. And if I really wanted it, I would have to get resourceful and figure out a way to earn more money, go get a side hustle, work extra, do whatever I was doing back in that point in my career. And now you can also fund this by saving over time, or maybe you have a windfall. Maybe you've sold a property, maybe you had some kind of settlement or inheritance or some way, or you've been saving over time and you just learned about this concept. This is a way where you can fund the policy instead of paying for the thing with cash. You have the ability to access the capital in the forms of a tax-free loan. So if you're a business owner, you might even be able to write a promissory note and use that to get some tax benefits, right? Again, not advice, but just showing you guys, this is some of the ways of using this high early cash value model to not only meet your needs immediately, but also to build this, right? Because if you put more in the beginning, you built a bigger container. That means you take that loan, and as you're being an honest banker and paying yourself back, you're paying your business back, because it's your business. You should take better care of your business than you do if you took a loan out that you're going to pay back for a car, for a home, maybe a personal line of credit for some investment you made, or a trip, or something that you did for your parents, your kids, maybe even school, right? Whatever it was that you took a line of credit out for. But I had someone the other day who did something, what I did. So I'm going to share a story of mine And you may have heard me say this before, maybe not, but why did I start my fourth policy, right? It was because I had a problem. What was the problem? The problem was Uncle Sam and an unexpected tax bill. With our company being an LLC for the first couple of years of existence, as we grew, we determined to keep scaling, to keep adding more value, we wanted to change the structure. We wanted to become an S Corp. So we filed for S Corp status at the beginning of 2023. And towards the end, around Thanksgiving, we were approved. And we were like, woohoo, we're approved. We're an S Corp. We're going to save all this money from Uncle Sam in taxes. Now we're going to have a salary. We're going to have more structure with our company. And it felt awesome. We celebrated for a few moments until Uncle Sam knocked on the door, sent me an email, and said, hey, by the way, now, Jason, you have a $40,000 tax bill for payroll taxes. 20 grand on 12/15 and change, and 20 grand on 1/15 of 24 due. We had like a month, not even 2.5 weeks before that first bill is due. So I was in a bad mood. It was almost as bad as driving. It took 12 hours to go from Orlando to Marietta, Georgia. And if you guys map that out, that's like a 5.5 hour trip max, even with kids in the car. So we ended up taking like driving on the shoulder of the road, and my son kept asking, "What is that sound, Dad?" And I was like, "Hey, that's just to make sure if you drive off the road, you'll wake back up." And so again, back to the tax burden, back to the stress. I was stressed. I was in a bad place. I was a bit angry, and I was a bit ticked off. I already made the agreement with myself. I would never give Uncle Sam my money unless it ran through my financial foundation first, because I'm someone who has made a good living for a number of years. I've always been responsible with work, added a lot of value, and probably had millions and millions of dollars over my first 46 years passed through my fingertips. And so that was an agreement with myself. That was a rule that I made for myself. So when I stroked that first check of 20 grand for 12/15 last year, 10 days before Christmas, and sent it to Uncle Sam, I was not a happy camper. So I got down on my knees, something I've been doing more and more of, to ask for God's help, to ask for guidance. And I thought back to the book that changed my life, Becoming Your Own Banker. And I thought in that moment, what did R. Nelson do? What was he talking about that he prayed when inflation went from 8% to 20+%, and he owed over $500,000 in taxes, on his properties, on his real estate? What did he say he did? And he said he thought about all of the things he had learned thus far in his life. He pulled from his experiences. One, being a forester, being someone who could think long term in plots of 40 years, 100 years with trees, tree farming, right? And then he also thought about whole life. And he said, hey, when you're starting a new business, how long does it usually take for that business to be profitable? Years. And he thought, well, luckily, every time I've had a life change, I believed enough in whole life and protecting my family's legacy that I've made substantial premium deposits into my various accounts that I've opened over the years. And he saw the solution. And I remembered his solution. I'm not reinventing the wheel. And I said, I have enough money that we have recaptured and recycled from our other policy. And from there, I've had enough money sitting in the bank, in the regular old conventional Bank of America, sitting there in savings. And I was putting aside money to pay taxes. And so what I did is I started a policy. I started a policy that I could pay that second bill and make sure that money was doing all the things I always talk about. One, it was growing uninterrupted, free environment that had access to, that was in a stable environment that's protected against liens and judgment, and all of the things that we want with our perfect banking system. And it offered the long-term legacy for my boys and my wife. And so I put the money in there. I pulled out a loan, right, from that new policy. And I just helped someone do this exact same thing this week where he did 6,000 a year with a $50,000 dump in, because that gave him access to 43 to 45,000. I was going to show you guys all this on a spreadsheet. I'll do this training again at another time. But the point being is, when we have a problem, we can solve it with the special engineering specifically for the individual. The woman with the backyard renovation, right? She's a CEO, a CFO, someone that's uber successful, super high achiever, usually pays cash for things. And by putting this strategy in place, she instantly protected her family for over $7 million, doing $100,000 a year with a $200,000 dump in. Now, you've heard two very far apart approaches. One, 6,000 a year. It's pretty manageable, right? That's less, that's $500 a month and a $50,000 dump in. But he's going to use that money that was going to go to Uncle Sam straight up, and he would never earn money on that money again. Now he has the ability to take a loan out of 80 to 90, 85 to 90%, depending on the approval, and put that money to work right away to pay Uncle Sam. And then all the money that he was going to save in a regular savings account will be how he pays back the loan to do that next year. And why would you do that? Why would you give up some of the access and the long-term thinking? Well, it protects his daughter, number one. Number two, Uncle Sam does not receive all of that money without it running through your foundation first. And then on the other end of it, right, you're also doing all of the other most optimal things for your family, and you have a system now. You have a systematic approach to paying your taxes. I helped another guy who's almost always here, Drew, set up the same thing with his family. And so this is an approach for business owners that I recommend, because I do it and I won't ever teach you guys anything else, but this is one way that you can use a higherly cash value policy, paying the premium deposits, and then using it for things that you're going to finance in your life, like taxes, like kids' education, cars, vacations, weddings, investments, all of the different things. You're going to need the money for these things in your life. And so, going back, circling all the way back to the beginning, first, what do we have to do? Guys, pop in the chat. What's the first thing that we have to do to be able to participate in this specially engineered whole life policies? We have to have what? Of the two pains in life, it's either regret or discipline. Which do we need first? Discipline. We need the ability to pay ourselves and do what the wealthiest families have been teaching us to do. It's right there. It's just like Warren Buffett says, if the poor would just do what the rich are doing, they wouldn't be poor anymore. And that's the truth. It's all about modeling. It's modeling efficiency, but it's not modeling everyone else that's out there, not all the sheeple, not all the other people that aren't here learning with you. Don't model them. Don't listen to your broke ass brother-in-law. Don't listen to people who are, saying, hey, if you sign up for this course, you will have all of your problems solved. That's just not true. They might be offering great material, but the magic, the secret sauce that you're all looking for is here. It's in you. You have the key. You are the solution. You are your mountain. You are your obstacle. And so if it comes to money things that you guys are looking, Emmett, Dennis, Felix, again, you guys are different. Everyone that's here is different. You already in the 5% because you're giving yourself the knowledge on a consistent basis. This isn't overnight success. This is repetitive. This is having a system that you can apply. And we're not reinventing the wheel. Everything I'm teaching, everything I'm talking about today, we've talked about numerous times before. Today was really about how do we specially engineer these policies to have that higherly cash value so you can use it for all the things in your life. And remember, we want to look how. Why are we using this system? We want it to be protected, right? We want it in a stable environment where they've been profitable since the late 1800s, since 1877, 1840s, 1850s, and we're talking anywhere from 119 to 170 years, consistent performance. That's what we want. In a world that society seems upside down, things seem crazy, where it seems that we have no control. I was telling my two boys earlier today, we live in the safest time ever, the best time, the time that has the most opportunity. We're in a time right now where infinite banking, because of webinars like this, because of your attention, because of your ability to bring other people here to teach them to be the leaders in your community, we have an opportunity to really shift the paradigm and bring it back to a you and me level. It sounds crazy, but why not? Why not build systems that protect our families truly, that we do not give up power as men, as women, as leaders of our family, of our community? Why not have it growing in an environment that is protected, that is tax-free growth, tax-free loans, tax-free distribution, that it's guaranteed, that you have two guarantees in every contract? You know why you guys don't have a problem with me? Because what I'm telling you has been used by the wealthiest families, the Rothschilds, the Morgans, the Stanleys, the Barclays, Walt Disney, the Pampered Chef. You know, we have all these different stories that we share all the time. It was used for the Ronald McDonald campaign. It's used for founding fathers, for my campaign. You know, I'm not in that league yet, but you guys are here because this is a place where you can come and learn and consistently learn. So let me know what questions, and they whack you with a bill from the beginning. That's it, Dennis. It's always, if you're looking for what is keeping you from the success you want, all you have to do is look at what you've done up until this point and start asking the questions. What would it look like if I paid myself first? What would it look like if I privatized my financial system? And privatized is just a fancy word for a specially engineered whole life policy. And special engineering just means we're designing with cash value. We're giving up 60 to 70+% of the commission, which sounds, again, crazy. Why would anyone do that if this is a livelihood? Well, it's more than that for me. For me, it's coming here and being able to teach you guys. Again, today, turning lemons into lemonade is kind of my message for today. It's really thanking someone that's bigger than me, someone that can come up with a solution, and really knowing that I am blessed just to be here with you, to be able to share this. So let's keep learning together. Let's keep finding ways that we can take back control over money. We can protect our families in a guaranteed way, create guaranteed legacies immediately. And it's all by changing that one thing. And it all really comes down to you loving you just a little bit more, having a little bit more patience with yourself, and really just understanding that you might want some really cool things. But if you're patient first, who knows what you'll be able to achieve when you start giving yourself a tailwind in your financial life rather than a constant headwind that you've been going into now. That's a whole nother analogy for another day. But let me know if you have any questions. You guys have been awesome being here. I really, again, am blessed to be here every week with you. Next week, we'll be back with working slides, working things, and all the other things. But this has been a fun little adventure. I'm going off. This has literally been what the guide is, right, for today. So let me know what questions you have. Otherwise, I wish you guys nothing but the best. Be blessed. Some of you might even be here in Nashville with me in the Music City. Look forward and have a blessed rest of your day. And I'll see you guys next Thursday. Keep learning. Keep giving yourself these tools. Have a great one.